going to be a really fast video. I've been studying these markets a lot. I haven't really been trading too much. I've been mostly just studying and studying. Um, because again, one of the biggest issues that we get when we do this reversal strategy is the fear of the markets doing something like this, where it decides to just keep. All right, let me just break it down like this. Okay, so we all know pretty much the strategy. I've gone over it like endless times. It goes into oversold conditions in the Keltner channel, goes into oversold conditions in the stochastic oscillator, it reverses, right? Then it goes to, the opposite's also true. It goes into overbought conditions in Keltner channel, overbought conditions in stochastic oscillator, it reverses back down, price corrects itself. And then so on and so forth. It corrects itself yet again, right? But then you get these times where you think the price is going to reverse. You could even see there's like a thick distance, like a wide distance between the lines in in the stochastic oscillator, and you think it's going to reverse, so you enter here thinking it's going to reverse, it doesn't. You enter here thinking it's going to reverse, it doesn't, and then it just keeps sinking down. I think I realized what a good indication is, that it's just the price is just going to continue to drop. Okay, so I covered this briefly in my previous video, but I'm pretty sure it's confirmed now. Okay, so you see how these candles are getting really close, like the candles are getting really close to the to this 200 moving average. Now, there are times when the candles do touch, right? And the price doesn't sink. But in my opinion, once we see that this engulfing, a red engulfing candle, or even if the price is reversing up, whenever you see the candles pretty much touch this 200 moving average, I've noticed that's when the price decides to completely just sink or completely just rise on the upswing, depending on which side we're reversing from. So just to be safe, I really think that when you're doing this strategy, because again, I'm really just trying to reduce as much risk as possible. I think the best time to enter again is when the candles are far away from the 200 moving average. That's when the price is most likely going to bounce off the bottom or the top of the Keltner channel. From oversold or overbought conditions. That's when it's most likely going to respect the rules. And as you can see, the momentum starts to slow down on the reversals until ultimately it just sinks down. And of course, it is reversing back up, but it took a really long time. So if you would have entered here, and here, or even here, that's like 6 minutes of candles you would have lost at. So anytime you see the candle starting to approach this 200 moving average, I would say just avoid it. Again, when you're above the 200 moving average, only do call options. When you're below, only do put options. That also helps. I'm just trying to see if there's any other time where you can clearly see. But this is something that I'm not really seeing in back testing. It's something that I've been seeing in the wild, Again, this isn't going to be a long video. I'm not going to keep it long. Like I said, I covered the bulk of this whole thing earlier. This is just, confirmations and things like that. And again, as you can see, we're above the 200 moving average. You would only do call options when there's a little bit of retraction, because as you can see, call, you win, call, you win. See that? It went to oversold, and you win the trade in a big way. So don't do any put options, even when you think that, because as you can see, when it's oversold, you see the stochastic oscillator is just in continuous oversold. Sorry, when it's in overbought conditions and these candles are just surfing, you see the stochastics also in oversold. Overbought for. Oh my goodness, you see when the candles are in overbought conditions, just surfing along the top of the Keltner channel. That's usually when you're going to see that the stochastic oscillators been in non-stop overbought conditions. The reason I keep saying oversold conditions is because out in the wild when I'm trading, I'm usually seeing the opposite happen. I'm usually seeing it surfing down, so I just have a bias towards thinking that. But yeah, just only do calls. because let's say you see this right here, all these put options you would have lost. You would have lost. There's not that much retraction, so only do call options. These are just ways I'm using to make the strategy work a little bit better. You know, anything to help you guys out, increase the accuracy. Because this week, you know, I'm going to start going really hard this week. I'm just going to make sure like everything possible is covered, you know. Let's see. You see how the candles, again, like I said, when the candles cross over, that's when the trends change. Let me see. Yeah, you usually get a really long candle. See how I'm seeing it right here? You usually get a really long candle, and when you get too close to the line. All right, let's see. And the funny thing is, you know, you do get a nice consolidated market, but you know, once the candles touch it, you know, it could go either way. So I think honestly, don't do this in hard trends. You know, do it when it's in consolidation, but don't do it when it's in consolidation when this white line's going directly through it, because you have a better sense of the direction. You know, look at this call option here. See that it crosses, and you win in a big way. You know. Yeah, let me see if there's anything else. Call option again, you win in a big way. Yeah, don't do any put options when you're above the line. Don't do any call options when you're below the line. I think I'm going to the previous day now. But this isn't something I see all the time, but it's something I've noticed. That once the if you're in an uptrend, right, and the uptrend's in a or even a downtrend, and the market's a little bit consolidating, it's a little bit, you know, wavy, but you're in an uptrend, like the market's it's in a wave, it's in a consolidation, but you know, it's a nice, it's like a little bit of a I guess you could call it like a diagonal consolidation. See, but usually when that consolidation ends and the market just decides to do a nosedive or to just take off like a rocket is right when it starts to cross this 200 moving average. As you can see, it crossed 200 moving average and it just immediately sinks down. You know, now you're in bear country, and you literally have no chance of winning any trades that you would have entered, any positions you would have entered. You see, again, uptrend, only do call options. You know, put option was lucky here, but in most cases you see you have way more leeway with call options. Again, nice call option. I'm literally just gonna like stress this for you guys. You know, make sure you're trading on the right side of the line. Don't trade on the wrong side. I'm trying to think if there's anything else that I've noticed tonight. No, I think that's it. Another thing, indicators. People are asking me about indicators. A good indicator you could use is the where is it, the MACD, because MACD will pretty much tell you if you have buying pressure or selling pressure. So a good thing that I like to do is I'll see, like when I see that this candle right here starts to get smaller, and especially if it turns green, that usually means that the selling pressure is going away and the buying pressure is on, and you could see it actually evens out and it actually links up perfectly. Again, that's like a momentum thing, and of course when you're back testing, it's going to look like nice and clean, but you know, that is a good indicator. But sometimes I notice that it's a little too it's usually one candle ahead of the reversal. So if you were going to do a 3-minute strategy, I think that'd be good for that instead. But yeah, as you can see, man, see how nice it is when, you know, this is the ideal market, and either a slow uptrend or a slow downtrend, but the trend is slightly consolidated. You know, it's oscillating really nice. And of course you could have it like surfing down, surfing above. But all you have to do is wait for it to cross down. You know, make sure it's not too close to this 200 moving average, and then boom, shoot it right up. And I'm sorry I'm shooting this on my iPhone. Every time I try to shoot pocket option videos with my screen recorder. It's just too slow. Right, but I'm always looking for more stuff to show you guys. But this is a really cool strategy, just waiting for these things to cross over. Because once you see the buying pressure start, you know you're going to get a reversal, and especially when it gets up to here. So just look at that as well. All right, bye.